Good morning. Let's start with today's morning energy podcast. So, energy market since last couple of days, market has been trading in a very narrow range. We can say volatility has been there in the market, but still there are many things that to be discovered in this coming week. Because up to last week, we have seen OPEC has clearly told they won't be cutting down any production. Because of that, we have seen prices move very sharply. We have seen Brent trading very well about 85 level mark, whereas WTI is also trading very near to $82 mark. From the natural gas side, yesterday we have seen a very sharp rally in natural gas prices to the tune of almost 7%, which was actually not expected. But we'll see the what are the factors which have been impacting the energy market. But currently, let's start with the dollar index because since last few weeks, dollar index has been more important. No doubt today it is showing it is trading near to 102 level. Whenever there is a rise in dollar index, we generally see weakness in commodity market. Yesterday, we have seen bullion, base metal were traded in a negative trend, but crude oil prices was stable nearby. No doubt in the morning session, we have seen certain data point like from China trade balance narrowing sharply in July month. We have seen China's trade balance drop to 80.6 billion dollar in July month from 102.7 billion in if we compare YOY, which clearly shows the trade activities have been slightly under pressure in China. No doubt, export has been dropped nearly 14.5 YOY if we compare. China's trade surplus with US is reached to 181.8. As we know that since last couple of years, trade war has been there between US and China, and this type of data will definitely impact the relations. In fact, Chinese import fall to the most since May 2020. Means we can say before COVID period also, whatever our import has been a drop in China, despite there were continuous talk was that China is continuing to support the economy. That means it should show a positive numbers in import and export, but both these import data and export data has been significantly dropped. Import to China is dropped nearly 12.4% YOY, which is near to 201 billion dollar, whereas Chinese export has slumped by 40.5%, which is again 5 months low to the level of 281.76 billion in the month of July. So things have been actually not going very well from the China side, and that is why dollar index has been slightly trading with a positive bias. Whenever there is China is under pressure, then definitely that impact would be on commodity market. So starting with the Brent crude, we have seen prices are stable near to $85 mark as of now, 4 months high. After the latest update from OPEC Plus, that supply cut would be continued, which has supported the prices. No doubt there is a two things like US earlier told they will be increasing their inventory level, but now they are just waiting. Secondly, the Saudi has announced that they will be extending the voluntary output cut by 1 million barrel per day till September, which is again going to be supportive. But on the other side, demand concern from China has been still impacting. That is why market has been steady near to $85 for Brent. Similarly for WTI also, we have seen market is trading in a broader range of, let's say, 80 to 82 from 80 say from 82 level. This range has been impacted. Coming on the natural gas prices, yesterday we have seen there was a sharp jump to the level of 7%. In international, we have seen market move 6% to the level of 2.7. Technically, as we have suggested, high volatility is possible, but now high volatility zone has been starting for natural gas also. No doubt we are expecting market should breach 230 level for a new lineup rally. Otherwise, market can slightly cool down. But here the expectations high that increased demand for air conditioning is been there from US side, as meteorologist department clearly told hotter than usual weather will be persisting until 19th of August, which has prompted the investor that demand would be high, and definitely this will support the prices. So already we have seen a six more than 6% of jump in natural gas prices. Texas, in particular, is set to witness a record-breaking power demand this week, following the all-time high last week. So overall, we can see all of a sudden change in the temperature has supported the natural gas prices, and we have seen good rally. But we need to break 2.8 level in international, whereas on domestic side we need to break 230 to have a level so that we can go ahead for further new lineup. Coming on the overall market sentiment, we expect crude is going to be trading in a very narrow range only as of now, because dollar seems to be trading in a range of 101.50 to 102.50 as of now. A weak figure from China is definitely going to slightly support dollar as of now. So we may see a little bit bounce in dollar index to the level of 102.40, which is going to be slightly negative for crude prices. But coming on the data side, if we see today already we have seen China data has been uh, done with the trade balance was been slightly improving, but import and export data was been slightly deteriorating. But throughout the day, we can say from Eurozone there will be a final CPI number or trade balance data, whereas from US side today FOMC member Harker speech would be that trade balance data is been showing a little bit improvement. Final wholesale inventory data is been stable, and last is economy optimism data would be there, which is been improving. So important data series would be there in today's session, which will be impacting. But up till now, we can say market will be sideways to positive. Coming on the trade setup here, you can see yesterday we have seen prices market open around 68.45, made a high of 68.41, and throughout the day market traded in a very narrow range, but with a weakness. For natural gas here, we have seen almost 7% jump in the prices. So almost all fundamentals we have covered, from OPEC Plus to Saudi for its voluntary cut. Similarly, for natural gas temperature, new news is going to be supportive for next at least couple of days, because up till 19th of August, temperature is going to be hotter, which can increase the demand, and prices is going to be supporting. Coming on the technical side here, we have seen Brent and WTI spread has been furthermore exceeded to the level of 3.3, and maybe we may move to test around 310 level for spread between Brent and WTI. Coming on the Brent daily chart here, we can see prices has thoroughly breached the 200-day moving average after a bigger consolidation what we have seen in the month of May, June, July. Now technical pullback may be possible, but looking to the fundamental and tight supply, prices are heading to the level of 88, 89 soon for Brent prices. So maybe today we can see a little bit pullback in the prices, but overall things have been supportive as prices have been supported by 200-day moving average, Ichimoku cloud, and high volatility is expected. Coming on WTI crude oil prices, almost prices has stayed 83 level. A pullback is expected to the level of 79.50, or let's say 80 in worst case of scenario, but overall we are heading towards 86 level in some time, because thoroughly prices are above 200-day moving average, Ichimoku clouds are green, volatility will continue to prevail in the market. MACD is also trading at a positive bias. The overall technical structure will be positive. Coming on natural gas here, we have mentioned there is a cup and handle formation, and if it is a neckline bridge, we can see a rally beyond $3 also. No doubt, since July month started, market was trading in a sideway to negative channel. But meanwhile, last month also we have seen little bit bounce to the level of 2.8, and again came down. But with the this level of 50 Fibonacci, which is around 2.48, was acted as a very strong support. And in yesterday's session, we have seen a very sharp rally. This will be a third day rally for natural gas prices. So I think market is now heading towards 2.8 level or beyond that level. So one should continue to hold long in natural gas prices. Crude prices is going to be trading in a very narrow range. High volatility is expected. And secondly, the flat move was there, but with the yesterday's rally, now prices can head to the positive direction. Coming on crude and natural gas ratio, see, we were expecting here Ichimoku cloud was green, 200-day moving average prices was getting supported, prices were very well placed above 50 moving average. So we were expecting a little bit pullback, then it should go up. But all of a sudden, there was a sharp fall. So maybe a drop toward 29 or 28 zone could be possible as of now. So we can say today also natural gas is going to be slightly outperforming, but be cautious because after this level has been achieved, we may again move forward for crude and natural gas ratio, which suggests that crude is going to outperform natural gas as prices are placed very well on a multiple support like the support of 29 level. So buy on drop should be the strategy for crude oil and natural gas. Maybe some kind of pullback could be possible in today's session, but buy on drop should be the strategy. With this, I end my session. Thank you so much.